So how much does the president of South Africa earn? And what about ministers or members of parliament? Well, after the latest round of salary increases was approved this week, those numbers are now back in the open. President Ramaphosa signed off on new pay hikes for South Africa's top politicians, with a 3.8% increase approved for both cabinet members and members of parliament. Now, those raises were relatively modest in percentage terms, but because they apply to already high base salaries, the rand figures are what tend to grab attention. So let's start with members of parliament. MPs will now earn about 1.32 million rand a year, which is just over 110 grand a month before benefits. But moving into the executive, and that jump is a lot more noticeable. Cabinet members will now earn just under 2.8 million rand a year, while deputy ministers earn about 2.3 million. But at the very top, the process changes. You see, the deputy president's salary has already been approved, rising to about 3.3 million rand a year. But the president's pay works a little differently. You see, while Ramaphosa approves both increases for ministers and MPs, his salary must be approved by parliament. And so an independent commission has recommended a 4.1% increase for the president, which would lift his salary to roughly 3.5 million rand a year. But MPs will still have the final say. So why do these increases go ahead? Well, the commission says that they're linked to inflation, which slowed down faster than expected last year, settling closer to about 3.5%. Now, the approved salary hike falls within that range, and they are lower than the 5.5% increase granted to public servants last year. Treasury also notes that the government's wage bill has been shrinking as a share of total spending. Still, though, the optics are unavoidable. When everyday costs continue to rise faster than many salaries, these political pay increases, however they're justified, tend to land heavy. And so that's why the story resurfaces every year, not just about what leaders earn, but about what the public expects in return for those lucrative salaries. So what do those returns look like today? Well, in one critical area, that answer is becoming a lot harder to defend. Last March, President Ramaphosa publicly acknowledged South Africa's water crisis and launched a global investment council meant to drive funding into water infrastructure. 9 months later, the taps are running drier, the warnings louder, and the crisis harder to ignore. So this council was positioned as a way to unlock long-term investments and prevent collapsing water pipes and failing treatment plants. And so since then, though, the action has been slower. In Knysna, residents are facing severe water shortages approaching day zero. In Gauteng, Rand Water has warned that the system is under extreme strain, driven less by drought and more by leaking pipes, illegal connections, and unmaintained infrastructure that just can't keep up with demand. So that's the uncomfortable truth running through this crisis. South Africa doesn't have a water scarcity problem as much as it has a water management one. How's this? Roughly 45% of all treated water is reportedly lost before it ever reaches the tap, largely through leaks, theft, and failing infrastructure. And so one of the primary problems here is that responsibility is split across national departments, water boards, and municipalities, which makes accountability easy to promise and a lot harder to enforce. And so with winter approaching and demand rising, the pressure is now on whether coordination can move faster than the crisis itself. So beyond the immediate pressure points, there's also the question of where momentum is building. And there's one company in particular that is making that visible. Capitec Bank has just crossed a major milestone, becoming reportedly the fastest South African company to reach a 500 billion rand market valuation. It now sits within touching distance of First Rand and is worth more than Absa and Nedbank combined. And so for a company only listed in 2002, that is a remarkable run. But this milestone is a product of a broader business model, not some single driver. You see, Capitec's valuation reflects a corporation that has steadily shifted beyond being a pure credit provider. Today, the bank serves around 25 million clients, and a growing share of its income doesn't just come from loans, it comes from payments, value-added services, insurance, business banking, and fintech products, with Capitec Pay now supported on platforms like Binance. Now that scale matters. You see, with millions of customers using its app daily for transactions, salaries, airtime, data, and payments, Capitec has been able to grow its earnings while keeping its costs relatively low and fees simple. Now, despite its size, Capitec is still growing into its revenue base, particularly in payments and business banking. And so reaching 500 billion isn't the finish line. It's confirmation that the model is working and that expectations are now much higher. And before we cruise on to our bagel bite of the day, here's a couple of the headlines worth knowing. For starters, the European Union has pledged 95 million rand to fund a national program tackling school violence, bullying, and gender-based abuse, with money going into prevention education and psychosocial support over the next 3 years. Firefighters in the Western Cape have been battling multiple blazes near Ceres, Franschhoek, and Signal Hill. Now, cooler overnight temperatures have helped to contain the fires, and no injuries or property damage have been reported so far. And further up the continent, Zambia has become the first African country to allow Chinese mining firms to pay taxes in yuan, a move seen as part of Beijing's broader push to expand the currency's role and reduce reliance on the US dollar. And just a quick side note, if you are enjoying today's show, please be sure to like and subscribe. It goes a long way. Furthermore, if you haven't already, be sure to join our WhatsApp channel where we'll send you a daily message with a link to today's show so you never miss it. The link to that is either in our description below or our bio. Get involved. And on to our bagel bite of the day. Let's see what you got. The question is, which element was named after the Greek word for green? Was it A, chlorine, B, nickel, or C, sulfur? We'll give you the answer at the end of the show. South Africa chose the Springbok as the national animal. Not the most feared, not the most powerful, and heck, definitely not the rarest thing in the bush. And so the obvious question is, in a country filled with lions, leopards, and elephants, why was the Springbok selected? Well, for starters, the Springbok is native to Southern Africa, and it was one of the animals people encountered most consistently. It survived across wide stretches of country and adapted easily to harsh conditions. And so yes, it wasn't exotic, but it was certainly recognizable. And so the Springbok didn't suddenly become a symbol for South Africa. It happened in stages. One came in 1906 when the Springboks rugby team adopted the name and the emblem on their first overseas tour, giving the animal a very public and international identity. And then another followed in 1910 when the Springbok appeared on the first coat of arms of the Union of South Africa. And so by then, it wasn't just a common sight on the landscape, it was embedded in how our country chose to represent itself. And as for that bagel bite, the answer is chlorine, named after the Greek chloros, meaning greenish yellow, thanks to the color of the gas itself. A rare case where the element was labeled exactly as advertised. My friends, that's it for today's show. Thanks so much for tuning in. Be sure to join the WhatsApp channel if you haven't done so already. Otherwise, I hope you guys have a great day further. Be kind to one another, and we'll catch you all tomorrow for the next round of the good stuff. God bless.